Okay, so let's look at a quick wrap up of round one, year one. So last night, people made the final decisions and submitted year one, and I processed it, and these are the results. The current round points, I have a number of teams who earned over 400 points. Remember, we're trying to accumulate 2,500 points. You need about 417 points per round to accumulate to the top 2,500 points to earn the full points for this project. A number of teams had very high percentile ranks, meaning this company here beat 91% of the previous 1,200 teams that have played the simulation. So as we go down, we see that only 4 teams perform poorly. So the gross profit margins can give us a hint of why. So in the gross profit margins, we started out at a 40% margin. So every company that had greater than 40% margins did well in their gross profit margin. The companies that had less than 40% did poorly in the simulation points for the current round. If we look at stock price, we see the companies that did very well in generating profits did very well also in generating increases in stock points. Now, return on equity, this is the amount of profits you make compared to the equity in the company. Many students in teams of this class did better than the 50% mark on return on equity. Total points are the same for round one, but round two we'll see that this will be increased by whatever points you earn in round two, because of cumulative operating profit margins. This here would get reduced based on how inefficient you are with marketing. So if you overspent on marketing, you wouldn't have done as well. If you underspent on marketing, your operating profit margins may be better, but you might have sold less cars. So it's sort of a strategic trade-off. Earnings per share, and this is based on of course, your profits related to your outstanding shares. So if you issued stock, that could help to lower your earnings per share. So make sure if you issue stock, you use the money you generate wisely by reinvesting it in the company. Return on assets, we look at the profits in relationship to the assets of the company. And finally, net profit margin after interest and taxes. How much of your gross profit margin did you retain? And we have some companies that are hitting 70, 80 percentile ranks on this, doing very well. So overall, most teams performed very nicely during the first round. So if I go to, sorry about that, got a phone call. Okay, so this is my practice round, and I finished year one just like you did, and but you did in the team competition area. I'm just following along the practice. I completed round one. I'm in round two. So what you're going to see when you log back into your team, you're going to see your overview points. So this is how the simulation is scored. So I went from $12 to $22 in revenues, which generated 81% year over year change. And that gives me every percent change year over year gives me 1 point. So some categories I did poorly, well, here a quick ratio was down because I borrowed money and increased my inventory. Here, the quick ratio, we strip out the inventory, so it's just the borrowed money. But I did well in my profit margins. I had them above 40%. My operational improved, my net profit margin improved. My total asset turnover wasn't as good because I bought a lot of assets. This is looking at sales in relationship to assets. Purchased a lot of assets, so that was under stress. But did well on my return on investment, return on equity, earnings per share. For more on return on investment, they have a note down here about return on investment, how it's calculated. The return on assets, market capitalization, which is the stock price times the outstanding shares. It did very well, and my forecasts were better than year zero. So, but I had this, my operational investments improved, but I had this deficit. Why did I get this deficit? Because I did see a surplus in my pro forma financial statement, and when I looked on my production page, I saw that I had some unsold inventory, which I can resell this year, but this caused me to have unexpected profits that didn't materialize because it didn't sell as many cars as I forecasted. So that's why you can sometimes get this unexpected deficit. All right, so if you look at my overview points, I got 740 points for round one, which is good. Now round 2 is going to be harder because I'm have to beat my year 1. Year 1 will move here, and my year 2 will be logged in here. I'm going to have to beat my year 1 results. So before I do that, I'm going to check out my assessment. So this is something everybody can do. This, you go in and you see you get 0 to 5 stars, and you figure out, okay, I only have an average performance. How can I do better? Click this little information. I get ideas or suggestions on how to do better. So for example, a lot of categories I did very well. Total asset turnover I didn't. Operational investments were average, and my cash management was low because I had a deficit. So here's a good way to kind of review what you've done, how many stars you've got, your percentile rank, which shows you how well you've done compared to past players, and your performance, and suggestions to improve. So I suggest everybody who didn't do well to spend some time on this page to look at that. So on the charts page, I can look at my performance chart, and what's really important about my performance chart is the bottom chart down here is a market versus actual sales. So this blue box is my market potential, 2260. Yellow is my actual sales. So I only sold 2,000 cars. I could have sold much more. So when I do my new forecast, I'm going to base it on my market potential, not the sales I actually had, because I under forecasted and lost sales to competitors. So that's an important thing to understand. And the student user guide is good for, if you go to the student user guide, it has a great section on forecasting. It tells me the growth rate of each of the vehicles, and even gives me a chart that if everybody was making the same exact choices, would be the average amount of cars sold per round, giving me a good window of where to start. So if I feel my car is better, I'll forecast more. If I feel my car isn't as good as the competitors, I'll forecast less. Also here, they give a good overview of the advertising, percentage of effectiveness, and that can give me an idea of how to break that into money to make my advertising more effective. Okay. Let's see here. And then if I have my industry charts where I can go in and see how I did it compared to competitors. So a lot of analysis here in charts to see how I stacked up. Now in the industry tab, if I didn't do as well as I wanted, I could look at my competitors, see how did they build their cars, what was their market potential, what were their points in sales and profits, and get a better idea from my competitors. Just like in the real world where auto companies today can look at other companies' last year's annual reports, get facts about how the cars were built and information. This is where a lot of strategy and analysis can be done by analyzing the industry. And financials, of course, I could review my financials, income statement, balance sheet, and outstanding shares, and cash flow, get an idea. You utilize that MBA512 finance class to kind of analyze on a fundamental level how the company did. And then I start over again in year 2. So in year 2, I noticed that the customer's expectations are greater. Customers want more. And I guess that makes sense because just like in the real world, products get redesigned and customers want to have more fuel-efficient cars, and they want to have, more safety features, more luxury features, so I can redesign the vehicle. But I should probably be looking at this profit margin. So I'm doing 44% here. If I look at my overview, I see that last year my gross profit margin was 51%. So I'm going to lose points here if I don't increase this. So just to prove the point, I'm going to keep all my profit margins below where they were and see how well I do. Okay. I'm just kind of throwing numbers in here. I don't suggest that you duplicate the numbers I'm putting in here because I'm doing them very fast. And I'm just going to show you what happens if I keep a profit margin below what my average was for last round. And this is something you can do in your practice games to kind of test out theories about demand and, okay, so we'll make this, all right, so having lower profit margins here. But maybe I'm increasing my sales forecast to make up for that. Now you should practice these iterations, the different strategic ideas you have inside of your practice rounds before you do the team competition to kind of, test out your ideas and see how they work in the simulation. So here I'm on the marketing page. I'm just going to fill this in, but I'm going to pause it because it takes a while to do this and go right to production. Okay, so here I am in production. I see that I'm forecasting, so I'm going to need to buy some additional plants here. Actually, this is good. Good. And I put in my new production numbers, and I just take whatever the excess shortage is and duplicate it here, because why would I build more cars than I'm forecasting, and why would I build less? So this should always be 0 here. And I'm going to increase my operational investments just willy-nilly here, just to get an increase in that, because it helps me to keep my cars more profitable by reducing the costs in the next round. And then if I go into my finance, I have a $26 million deficit here. So that's a problem, because I can't process the round with anything bigger than $25 million deficit. So if I have such a big deficit, that's the first clue that there's a problem. So let me go back to my sales page and see 44, 46, 20. That's way too low. This is causing a huge problem. So let me reduce that. And I had to put a factor in here that was 333. Way too high, mistake. So let me fix that typo. And now I have a better profit margin here. So now if I go into my finance page, I see that I only have a $13 million deficit, which I guess I can borrow additional funds so I'm just going to borrow, issue stock, and issue long-term, short-term debt. Okay, and now that I issued some additional debt, I have a $3 million surplus. Okay, so I'm going to process the round and see what happened. Okay, so now I only earned 166 points. Why? Because year 1 was a very strong year. I had over 750 points. In year 2, I didn't increase my sales as much. My profit margins were lower. So see what happens when you have lower profit margins? That leads into lowering your operational, lowering your net profit margin, and then also lowers your asset, your return on equity, return on assets, earnings per share. So it sort of has a cascading effect on a lot of the other areas. I did have a surplus, which is good, and I did increase my operational investment. So if it wasn't for these 200 points here, I would have even been negative. So this is why it's so critical to make sure that you're always increasing your gross profit margins to keep your momentum. And that's what in the real world companies are looked at and judged by how they increase their profit margins, making sure that every year they're expected to increase sales and profit margins for their stock price to be maintained. Okay, so that's my quick little wrap up of round 1 of the team simulation and some suggestions of how to improve your round 2. So good luck to you. Remember, the next round is due Thursday. We have 6 rounds we're completing. We're completing 2 rounds every week. Every Tuesday and Thursday night is a new round to be completed in the team competition area. Thank you and take care.